you guys are producing an image of it's kind of all going according to plan, more or less. Maybe not as fast as the crypto industry, us crypto natives would have liked to have this, process of clarity arrive. But it seems to be like this is kind of what we would expect in the grand scheme of things. And one thing that I've definitely noticed in the last year or so, and ever since really BlackRock, I think, filed for their spot Bitcoin ETF early this year, there's a lot of interest in it from not just crypto natives, but from institutions and from what we've heard as murmurings of traditional financial investment advisors, account managers, your typical Main Street, your mom and pop shop investment advisor, right? And so, Cathie, something I really want to ask for you is, on the crypto native side of things, on the inside of the industry, of course we want the Bitcoin ETF. Of course we want that. And so we have motivations from our side to push that through. We have motivations from like BlackRock, Bitwise, ARK and 21 shares, all to get that through. But the thing that we still really haven't gotten our minds around is there really, how much interest is there on the buy side? How much is there from the retail? Like how much will actually show up ready to go when these products ship? And I'm wondering if you can shed any sort of clarity or light on that side of things.
Sure. So I think there's been an anticipatory move that there is an appetite. So that's one reason the price has been quite firm here. And so I will say when a spot Bitcoin ETF is approved, because I think the probability is, well, we think it's 95% now, if not higher.
Wow.
Yes.
Specifically in the early January window, or just,
We think it's very high. Ophelia, you might have a lower odds here. I don't know, but all the signals are, it could still, there could be still some details which would force the SEC, our ARK 21 shares deadline, January 10th, is the forcing function here. And is there a scenario where the SEC would come to all of us in line and say, okay, we've just discovered this, we didn't know about it, we would like you to, or we would like to push all these decisions back up to them. I don't know, but so far, so good. I don't think, I know that the cash versus in-kind, create and redeem, is an issue here, but, and we can talk about that later, but I think a couple of things happened, especially something 5 years ago in 2018. Cambridge Associates, which is a consultant to institutions, endowments, foundations, and so forth, wrote a paper about Bitcoin and said to the institutional world, okay, you may agree with all of these leaders who are calling it a Ponzi scheme or an environmental scourge on the system, but recognize that the correlation of risk and return between Bitcoin and all of these other assets is very low. So what we probably have here is a new asset class. And what institutions do know is that the best way to increase returns per unit of risk is to diversify into a new asset class. So this is very important. And so Cambridge back then said, you may not like it, and you may really believe all these people who are saying these horrible things about it, but this is the way it's behaving. And our study, and we've put this study out, we're updating it now, on what should be the institutional allocation in a broad-based portfolio to Bitcoin. If you want to, this is as of last year, we're about to publish new numbers, but as of last year, if you wanted to minimize volatility, the optimal weight of Bitcoin in your overall portfolio would be 2%. If you want to maximize your Sharpe ratio, so your return per unit of risk, then the number is closer to 6%. And this kind of makes sense because I remember other new asset classes, real estate, very early in my career. So 70s and 80s, real estate was the new asset class. And institutions started with a 1% allocation and then gradually moved up to that 5-ish%, maybe above. And then emerging markets, when that became a category, because it wasn't one emerging market at a time, but it was a category, a new category. Again, started with 1 and moved up to 5%. That, we believe, is what is going to happen here. And I think the fact that we and others are educating institutions that, wait a minute, this is mathematically metered to go up to 21 million units, and we're at roughly 19.5 million. The scarcity value is already showing itself. And with institutions starting to push in, that will be ever more true. So might we get a sell on the news? Well, sure, we've had a nice little burst here, and there's just the hedge funds trade on anything, on any news. So you could have a bit of a sell-off, but we think that the institutional demand is going to take this new asset class much higher in terms of market value.
I'm curious on the institutional side, in the TradFi side, Cathie. So that narrative that basically this is an uncorrelated asset class, it's a new asset class, and Bitcoin is maybe the flag bearer of that. But then you could kind of like look at all of crypto as that, and you want that as part of a risk-adjusted return sort of portfolio. That case was maybe first made in a broad strokes institutional way in 2018. So it's been 5 years like until that point in time, and we have more data. But how much of kind of institutional traditional finance has really bought into that narrative? Are you saying like it doesn't really matter because the data speaks for itself, and the only question to them is like, do you want a more performant portfolio over the next 10 years, and that will cause them to be like force them almost into allocating to this asset class? You think we're at that stage?
Yes, and if you look at the performance of Bitcoin over rolling 3, 5, 7-year periods, it is the top performing asset. And overall, those periods since its inception, it's the top performing asset out there. So institutions cannot dismiss it unless they think there's they know something that nobody else knows, and I doubt they do, about the underlying technology. Even the risk of a hack, teaching them about, okay, this is the base layer hacks have been de minimis. Philia, correct me. It's the layer ones. It's it's not the base layer, it's the layers on top that have been hacked effectively. And once they understand that, they have to step back and reassess it, because, base layer Bitcoin is where they will have the exposure, right? In cold storage. It depends on which issuer, but in our case, at Coinbase.
To continue leveling up your crypto game, then you need to get on the Bankless newsletter. It's the world's most popular crypto email and is completely free. Just click below to sign up.